Hey, if you're a Georgia employee with a 403(b) plan, the retirement plan for folks in public schools and nonprofits, you've probably had that sinking feeling lately when you check your balance. Well, I'm here to tell you, it's not just you. In this explainer, we're going to dig into why your retirement savings might be taking a hit, and more importantly, what you can actually do about it.
It's really tough to see those numbers go down, especially after all the hard work you've put into saving. But seriously, if you've noticed this, you are in the same boat as a lot of people right now. The good news? There are some very clear reasons why this is happening, and even better, there are clear steps you can take to feel more in control. Seeing that balance drop can be really stressful. I get it. So in this first part, let's just get right to the heart of the matter.
What are the big forces at play here? It's almost never just one single thing. Usually, a shrinking balance is caused by a mix of factors. Everything from the big picture economy all the way down to the tiny fees that might be hiding in your plan. Let's break them down. So, just think of your 403(b) as a big basket holding a bunch of different stocks and bonds. When the entire market gets choppy and goes on a roller coaster ride, the value of that basket is going to dip. And it's not just about stocks. Even those safer investments like bonds can lose value when interest rates go up, which can feel like a real double whammy for your retirement funds.
Right, your 403(b) doesn't exist in a bubble. When inflation is running high, all those companies you're invested in have to pay more for everything, and that can really hurt their stock price. And if there's talk of a recession, that often triggers a downturn across the whole market, dragging down even the strongest portfolios for a little while.
Okay, now this part is where you actually have way more control than you might think. Asset allocation is just a fancy term for your personal investment game plan. Are you maybe a little too heavy in stocks? That's awesome for growth when the market's flying high, but it also means you're going to feel the sting a lot more when things head south. It's all about finding that sweet spot, that perfect balance for you.
So as you can see, it's kind of like a perfect storm, right? You've got these huge market and economic forces that you can't control, and those are mixed in with your own personal investment strategy. And on top of all that, you've got those pesky little fund fees that can be quietly nibbling away at your returns without you even noticing.
All right, enough with the doom and gloom. Let's shift gears and talk about solutions. What can you do right now to take back some control, protect your plan, and get things moving in the right direction again? So the source we're looking at suggests a really simple three-step action plan. And listen, this isn't about making rash decisions out of panic. It's about being smart and strategic. Let's walk through what each of these steps really means.
Step 1 is basically about having an honest conversation with yourself. Are the market swings keeping you up at night? Are you getting closer to retirement? If so, it might be time to dial back the risk a little bit. Shifting some of your money into more conservative funds can act like a shield, It helps protect the money you've worked so hard to save.
You've heard this a million times, but it's the oldest rule in the book for a reason. Don't put all your eggs in one basket. By spreading your money out across different kinds of investments, stocks, bonds, maybe other things, you build a buffer. That way, if one area takes a big hit, the others are there to help balance things out.
Now, let's talk about a super common situation. What do you do with those old 403(b) accounts from jobs you left years ago? You might be surprised to learn that just letting them sit there might not be your best bet. Let's look at what you can do.
So here are your three main choices. You can roll that old account over into an IRA, which usually gives you way more investment options and often lower fees. You could also look into something like an annuity for that principal protection. Or you can just leave it where it is, but honestly, that really only makes sense if that old plan has fantastic performance and rock-bottom fees.
Okay, we've covered a lot. So what should you do next? Based on our source material, here is a very specific two-step path you can take to get your retirement plan back in shape. Now, this two-step plan comes directly from our source, Georgia Safe Retirement Planners. Their whole focus is on helping people protect their retirement savings. So here's what they recommend.
First things first, step 1 is to do a real deep dive review of what you currently have. This is all about making sure that your investments still actually match your goals and how much risk you're comfortable with. Are they still aligned with where you are in life right now? The whole idea is to tweak your portfolio to smooth out some of that painful volatility, protecting your savings without giving up on future growth entirely.
And that brings us to step 2, which is all about making sure you have a reliable income stream in the future.
Now, this is a pretty powerful strategy. It's about looking into products like a fixed indexed annuity that lets you take part in the market's gains, but, and this is the key part, they have a built-in floor so you can't lose your initial investment. The goal here starts to shift from just pure growth to building a protected, steady income stream you can count on in retirement.
And so, after looking at all this, it really just leaves us with one final question for you to think about. With all the uncertainty out there, is your retirement plan actually designed to handle it? Or is it time for a review?